This is part 6 of my 7-part stock market in-depth analysis to conclude in a detailed trend forecast for the whole of the remainder of 2018. This video takes a look at the US presidential cycle, seasonal analysis and economic fundamentals expected to impact on the stock market. The whole of this analysis that includes my trend forecast was first made available to my patrons who support my work. To get immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for as little as just $3 per month. The US presidential cycle. For the first year of Trump's presidency, we would constantly hear about how great the stock market was doing under Trump. In fact, he still says the same despite the stock market having flatlined for 2018. The basic pattern for the US presidential cycle is for a strong election year and post-election year, followed by a weak midterm, then a strong pre-election year. The trend today is clearly continuing to prove remarkably in line with the US presidential cycle, which does not bode well for the remainder of 2018, i.e. it implies that stocks are going to remain stuck in this trading range for the whole of 2018, which is one of the reasons why I was bearish for the prospects for the stock market at the start of this year. Whilst the basic stock market seasonal pattern is for a weak January for stocks to rally into May, then down into August, and after a wobble during October to rally into the end of the year. Well, mostly for 2018, that's not how things are playing out, as the market has been showing relative strength since mid-May. I suppose it could still fall into Labor Day. Anyway, going forward, the seasonal pattern points to a weak October, then it's up into the end of the year. And finally, a look at the US economy. The US economic fundamentals are good, as real GDP is rising at an annualized rate of 2%. Whilst not a boom, it's definitely not deflationary, so supportive for stock prices, as the economy continues to chug along whilst the Fed raises interest rates. A stable, strong economy can further be seen in the unemployment statistics of just 4%, with a continually rising record number of Americans in work at 148 million, up 18 million from the 130 million trough in the aftermath of George Bush's financial collapse. Whilst inflation is significantly above the Fed's 2% target at 2.9%, hence the Fed's rate hiking cycle. However, inflation tends to be good for the stock market. This also makes me wonder what the deflationists are smoking with a perma mantra for an always imminent deflationary collapse. There is no deflation, nor will there ever be, apart from the rare blips such as November 2008. So the fundamentals are supportive of rising stock prices. And the final video in the 7-part stock market series that concludes in a detailed trend forecast for the whole of the remainder of 2018 will be published shortly. However, the forecast was first made available to my patrons who support my work. So to get immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for as little as just $3 per month.